On behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to Wayve Wire. I'm your host, Todd Schoenberger. We do have breaking news today. The Supreme Court has ruled against the president and his tariffs. And so we're going to break it down for you today on Wayve Wire. We have the C-suite executives, the CEO of Wayve Capital, Joe Besecker, and the CIO, Rhys Williams. Rhys, I'm going to start with you. We've talked about this quite a bit over the past few weeks about the tariff ruling, and we realized that this was probably going to be the way that it was going to go. However, what happens next? Stocks are obviously rallying on the news, but is it going to stick?
Yeah, I think there's a couple of reasons why it's helpful. One, I think the rule of law is imposed or is upheld. I think because he had appointed these judges, the judges sort of ignored the Constitution and said, yes, these tariffs are fine. I think that's a real problem. I think the fact that the Supreme Court is independent and the Fed is independent is what makes America great. And that's, even if I like Trump or didn't like Trump, that's what I would think. So that's point one. Point two, it's interesting. I do think, though, that Trump is not going to say, oh, I've been wrong for 40 years about tariffs. We're going to go another direction. He's had a lot of time to think about this, he and his team. So I think you will use existing statutes to reimpose a lot of these tariffs. So I think that's why if you look at the market reaction, I would say the real beneficiaries are the retailers and the product companies that are making consumer products and things like that are not rallying much. One, I think this was an expected ruling, but also I think people feel like they're going to be reimposed on a lot of these tariffs.
All right,
you don't have to come to me. You don't have to come to me. I agree with, except for the beginning part of what Rhys said. I agree with everything he said about the market reaction. I don't think Trump's gonna. I agree with Rhys that they've had time. They pretty much figured out. You look at the prediction markets, whatever. They kind of saw this coming. So I think it's a muted response, but I think that people like Rhys and others will consider this to be a good thing for the markets.
So one of the issues that has come up is about the rebating. Will we be rebating hundreds of billions of dollars to these countries that we impose these tariffs on?
They
they
may get money, but it's going to take them a lot. They're going to have to pry it out of their hands. The Supreme Court didn't address that, and I think that I think some of the deals that were done before, that were locked in, I don't think they're going to change much, and I think they're going to fight the rebate, and I think they'll come to settlement.
So here's the question, though, Joe. If we do have to rebate, let's say a lower court says, yep, we have to rebate, $200 billion or whatever it is. The United States government writes that check. Let's say that happens. But you, as a consumer, were imposed with these tariffs with higher costs. Right. Now, who's rebating Joe?
Well, you saw Costco. There was a number of retailers that signed to get in line. We talked about that maybe a month ago. They're going to be advantaged because they're already to the front of the line. I don't know how this is going to work out. I don't know but I believe, and maybe Rhys has some more insight than I do. I believe that there will be negotiations, and I don't think they're going to get every dollar in rebate. But I think the ones that decided they might incur the wrath of the president when they did sue, I think they're going to get something, and I think we'll see what happens. I don't think they'll get dollar for dollar, though.
I hate to agree with Joe so much, but it's the same. I agree that it's going to take a long while, because I think the administration doesn't want to pay, and they're going to figure out ways to hold on to the money for as long as possible.
Of course, anybody would do that. Any business would do that. Right. But Rhys, here's the question I have for you then. The seconds that this ruling came out, Dan Ives put out a report from Wedbush. I mean, literally seconds. I mean, it was almost like Chief Justice Roberts sent Dan a text and said, hey, Dan,
you got a wink and a nod, right?
Yeah, right. It just happened. But at the end of the report, Dan Ives, and I love Dan, he's a great guy, very optimistic, though, when it comes to that tech sector. He's saying that there's still $155 billion that's yet to be collected. And as a result of the ruling today, it's going to help. It's going to be optimistic for the tech sector. Rhys, why would that be the case?
The short answer is I don't know, but it doesn't make sense to me, because largely the big tech stocks and the whole AI data center boom has been exempted from tariffs. And Apple got exempted. kind of the big companies that know how to kowtow to the White House have gotten exempted. So I don't get exactly why the tech stocks seemingly today are the biggest beneficiaries. Maybe it was the Dan's note. I really don't know, because it would think that the retailers that had really gotten driven hard by this or gotten hurt by this would be the beneficiaries of this ruling.
Right. And you're right about the retailers. One item, the area that is not impacted are the autos. We are not going to see any changes whatsoever to the auto industry because of this ruling.
Oh, is that altogether true, Todd? I mean, auto's new, but the parts isn't the auto parts?
That's a good point. That's a very good question. And that part I don't know. All I know is that because of the International Emergency Economic Powers Act that was actually in play here with the Supreme Court, the feeling is that autos are not at all changed with these tariffs going forward. So I'm not exactly sure how that's going to play out going forward, but you are right, though, for those parts that are international and they're coming in, even for some of our domestic cars, we'll have to see how that plays out. There's time to be spent with that. So with that said, Rhys, which sectors the audience wants to know? I mean, you mentioned tech is going to do well. Are there any other specific sectors that should do well from this ruling?
Yeah, well, I think tech's going to do well because tech's doing well. Largely not because of this ruling. That's just because that's where the economy is booming, and so they're going to benefit from that. I will tell you, I bought one home builder, and because I just bought it, I better not say the name. But if I'm Trump and I care about the midterms, and I know he does, I would maybe look to exempt some of the building products and things like that to really help the home builders and the new home construction and the affordability issue. Because if he can get the headline that home prices are coming down, and this is the Trump, this is something to do with Trump, I think that's going to help him in the midterm, because it's a big cost, and it's been the sector that's sort of been missing in action over the last several years.
Okay, so that sounds great, but what do you think, Joe? I mean, is this going to impact your day-to-day life?
No, not mine. Okay. And I think that because Johnny One Tune, we're in this transition period. Okay, we have 1 year of Trump. He's trying different things, throwing stuff up against the wall. Some's working, some's not. We have the challenge that we might face in 10 days if Trump decides to go do a bombing or anything like that. So I still think you've got making a global statement is very difficult right now. Well, Rhys and I talk every day, and we were talking, and I guess we're going to talk later about private credit. Just things you got to look at them individually, sector by sector. I like life sciences. I think this is an area that is kind of newsproof. I do think that the bigger problem, I don't believe that the tariffs created any extra inflation that I could really see from the numbers. Where we are seeing inflation is in healthcare, all right, and we're seeing it my biggest thing is they're also going to have to get their hands around healthcare, and that's that and different services. So we'll see. But no, it's not going to change my life. Or my investing life very much.
Final question on the topic, Rhys. I want to touch on that with what Joe just said. Do you believe that tariffs impacted inflation?
Yes. And I think most people think it was maybe 30, 40, maybe as much as 50 basis points of the inflation.
It doesn't show in the numbers, Rhys. It doesn't show. I just don't think it's been showing. I think it was a fear, and people were trying to talk into that, but the hard and fast numbers now, there's certain areas.
Where would have inflation been without them?
That's a valid point.
Inflation is at 3%.
That's a valid
2.5%. That's my bet, is they would have been closer to 2.5%.
Okay.
Because I do think there was a real, and also there was a lot of effort not to pass this through yet, because front loaded a lot of inventory, and then
those are valid points, but in actuality, to the consumer, it hasn't been as bad as all the bugaboo people said.
It has not been disastrous. Consumer spending has stayed very strong.
Correct.
But once again, that may be the upper 25% that's benefited from the stock market and their real estate values.
I agree with you. It might affect the restoration hardware or Best Buy, all of those in a way, because they probably had to gobble some of that themselves, and now they don't have to necessarily worry about it. But to the consumer, it really didn't show. Now, your point is, what would it have been? I don't know, but it's hard to tell what would have been.
So, Rhys, if that's the case with the inflation argument, then now we're eliminating tariffs. Therefore, that should help inflation. Now,
Yes.
how does that play going forward with the Fed?
So it helps inflation on the negative side, and this will move me away from being a Trump deranged person. It was good for the budget deficit, these tariffs, right? And so you're going to lose that help if they don't reimpose them all. And like I said, I largely think they're going to reimpose most of them. But if to the extent that they don't, that's going to mean there's more Treasury issuance, which might actually increase the mortgage rates, which might hurt a little bit. That's all.
Not going to happen. Mortgage rates next year at this time, we'll say Valentine's Day next year. And I'm told I'm not allowed to bet pizzas anymore because of what's going on with Epstein. So my son says that I said, don't bet pizzas anymore, but we'll bet a cheesesteak then. Okay.
There you go.
All
there
right.
You go.
I'll bet you cheesesteak that next year, Valentine's Day next year, rates will be, in my view, the long rate for mortgages will be lower to the point where it have a significant impact.
I think all things being equal, though, the risk is you have to issue more treasuries. That's all, and that just supply demand issue.
I guess my only problem with that, Rhys, and you might have a better idea, or we'll bring somebody on sometime that does. It's the same with when I talked last week about cyber. Is there as much appetite for U.S. Treasury debt globally as there was, say, 2, 3, 4 years ago? I don't know, because I know some people just don't want to. It could be China not buying, could be whoever not buying. I don't know. So if it was the same, I wouldn't have any problem with the issuance. But I don't know.
Right.
Well, the largest
supply and demand, like you said.
The largest holder of treasuries is Federal Reserve. So. Right. Are we continuing to buy those treasuries? I would say yes, absolutely, we will.
I don't think he wants to do that. At least that's what I read. He was against that when we were gobbling up a lot of it. I don't know.
Valid point.
Yeah, and will he be appointed? Will because Trump is nominating him, he could nominate Mother Teresa, and there's going to be people that would just vote against him.
Oh, I think as soon as they drop charges against Powell, he goes through with flying colors.
Okay.
But why haven't we? Let's turn that real quick, Rhys. Why haven't we dropped? Why hasn't the DOJ dropped the investigation on Chairman Powell?
I don't know. Makes no sense to me.
Is there more to the story that we haven't publicly heard?
I don't think so.
Yeah, I just think it's, maybe it's just the time element. I guess we have until May anyway. He doesn't want to look like he's reacting.
It's 2 months.
Guy that likes being in charge, and to have Tom Tillis tell Trump what to do, I'm sure that's a real problem for a guy like Trump. So, I'm sure they've just got to figure out a way to finesse it. I think they will, because obviously there's not really a legal case here, but who knows?
So, as crazy as it sounds, guys, and I want to get your thoughts on this. Even with the ruling today, it seems that everything's chaotic all of a sudden, whereas we had some stability. We were anticipating this ruling, but now that we have it, it's just been a Pandora's box of questions. It's going on. We want to know.
Well, it's just gonna take time to transition into what it is. You don't think he's going to sit there and take this? They're going to come out with the different other, avenues to try to get some of that money. So it is going to be a period of time of confusion, and it's just what we got to deal with. It's kind of like watching them make sausage. I mean, it is the way it is, and people like us have just got to figure out, do our homework, and see what we can come up with. But it's too early to make any broad generalizations.
Okay.
In my view,
the good news I just want to is it is peak tariffs is behind us. Whatever happens, it'll be less than it was.
I think you're right,
and so I think that's market positive.
I think you're right.
Okay, well, that's good. That's a very good sign then. The Dow has turned negative. We're down 100 points right now in the Dow.
Yeah.
So, I think people are probably digesting this news. And
the Nasdaq's up almost 100, though.
There you go. More buyers and sellers. So Let's turn the page to the other big story. It's not the PCE number. It's the Blue Owl story. You have this halt on liquidations with a retail-based fund. Rhys, can you tell the audience a little bit about what's going on at Blue Owl?
Well, that's very complicated what's specifically going on at Blue Owl, but I think perceptually, when you gate returns and you stop redemptions, that's a bad headline, clearly. And it doesn't sound like it's actually as bad as all that, but I'm not sure people get into the weeds on that. I think just the idea of I used to think this was going to be liquid and now it's not is probably a problem for new sales at a minimum. And probably motivates more people to redeem that might not have done it.
Yeah. New sales. How about any sales going forward? If you're a retail investor, Joe, I mean, you got to be scratching your head.
I think that I saw in our prelim comments that you're not a particular fan of their democratization of private credit. Is that fair?
That is very fair, but
okay.
But now going forward, I don't like the idea.
My feeling is.
Yeah, go ahead.
All right. I'll give you a 30-second. And Rhys and I have talked a lot about this in the last 2 days, and we're on surprise. We're not necessarily in agreement. I think that the people that were doing the credit standards for Blue Owl and others, there's some pretty smart guys. Yet, and one of the reasons I had Blue Owl on my watch list, but I never bought it, never looked at it, just not my area really of expertise, but I can tell you that I know people that do this for a living. And when I went to see them present about a year ago, I remember thinking to myself, I wouldn't want to borrow money from these guys. They're going to take my testicles, my firstborn, my dog, maybe my wife. I believe that these credit people were very, very, very tough. Okay.
Yeah.
But the marketing people just kept going out there, and maybe the marketing people did not really sell it as it was supposed to be. You might have heard their pitches. I don't know. I never really went to a Blue Owl marketing pitch, but I do knew about what they were doing behind. I believe that people trying now, remember, why really people were upset was because they thought they lent a ton to the software people, right? Well, it really was only somewhere about like 8 to 10%, somewhere in that ballpark. Mm-hmm. Additionally, and what really bothers me when these people try to compare this to the 0809, when the mortgages were all packaged and crap was sold. Not only that, but they levered it. I don't even know how many times they levered it. Okay. Here, They took a little leverage, but only 0.75 in general. I don't think that these portfolios are radioactive. There may be some impairment there, but these guys were smart lenders, and I believe people will get their principal back. Additionally, their first fund was different than their second fund. And I don't believe that people, well, I didn't see the presentations. I don't believe that people really thought that this was like a money market account that they could get their money back at any time. They were 4-year loans. And I think that people should have been told that it was like a 4 to 5 year investment, and they're paying back 30% as opposed to 5% a month in this next thing. I for one, am kind of looking at Blue Owl right now and others that it's not typically something I do, but with an 8% dividend, 7.5%, 8%, and what I think is basically decent underwriting, I think it's something that I'm not recommending anybody do it because heaven forbid if this thing blows up. But I think this is more noise. And you know this, Todd, and Rhys knows this. We now live in a binary world. It's either all in or all out. And I think the truth falls somewhere in the middle.
Rhys, does Blue Owl survive this?
Oh, I think it does. I've got no reason to think it does not. And I kind of agree with Joe that there's probably a lot of value here. On the other hand, where are we in this unwind process? I think that's the issue that Joe and I debate. Is this the kind of the third or fourth inning of a process, or is this the eighth and ninth inning? If it's the eighth and ninth inning, you should be buying with both hands.
Well, the other thing is,
so there's more.
So when they talk about them as a canary in a coal mine, okay, blue owl, canary bird talk, right?
Yeah.
I think people were saying that it's a canary in the coal line for the whole private credit market. All right. And what I would say is there were some interesting things that are starting to come out. Two things they made, I think, really big mistakes. There were four buyers. Okay. Three of them were totally independent. One of them, however, was a related party insurance company. But if they thought it was a good deal, even though it was a different, they probably should not have sold to a related party insurance company. The other thing, I just think their messaging has been poor, but these are guys that do credit. They're not exactly marketing gems, right?
Yeah.
And the second thing that came out of a lot of this was, and I found this very interesting, is that some of the story going out is that here in Lancaster, Pennsylvania, where I'm sitting right now, they were trying to put up a power situation. What do you call it?
A
There's a
windmill?
data center with CoreWeave. That was
Right. CoreWeave was trying to do a deal here, and Blue Owl was trying to raise money based on that, and they didn't see the appetite for it. So in that respect, okay, where the money's not coming all the time, that is a concern, but they haven't given that loan. And some of these others, you're going to get, I believe that these are debt instruments, not equity instruments. So they're going to get their money back, but it just shows that trees don't grow to the sky. Not everything is going to get funded, and you have to be selective. And I think on balance, they pretty much are. This is not, in my humble view, a repeat of the mortgage mania that happened in 0809. That's just my feeling. And I think the standards are harder. There's not as much leverage. And I believe on balance that they have better technology and better tools to really understand these rules. You know, a lot of the AI helps that. So if you put a gun to my head, I'd be a buyer of those names versus a seller. But that's me. I like risk. I talked to you. I like octane. So now I have something where I have potentially some octane with maybe a 7.5–8% dividend. I would dabble, me, but that doesn't mean everybody should.
Rhys, your CEO just said he likes risk. Are you looking at private credit right now?
I personally am not, and only because, once again, I think we're in the third or fourth inning of this, and there's going to be another headline 3 months from now that some software
could be 3 hours from now, Rhys. You know,
my point is, and I think the market is very jumpy right now. I don't see, and the other issue is there's no catalyst to say, you know what, these software companies are okay. AI is not going to kill them. And right now, look at where a package of great software companies are trading: Workday, CRM, Adobe, Intuit. You know, these are solid companies with huge revenue bases, and they go down every day. So I just think you've got to fight that tide for a while. And I don't see what turns sentiment. So that's my issue. I don't disagree with, if you probably walk away for 2 years, and you could probably clip that dividend, and it's probably higher 2 years from now. But I just don't know, you know, where it goes in the near term.
Well, and I have to raise my hand and say, this is not an area that I traditionally swim in this pond. I just don't. All right. But I am smart enough to know, and I've seen, and I know a little bit to know that my spidey sense says that to use Rhys's analogy, for the credit part, I'm talking about the credit and the debt part, we are closer to the 7th, 8th, and 9th inning than we are the 3rd or 4th inning. So we agree to disagree. That's what makes a market.
Well, let's hope we don't go into extra innings on this one. So, Rhys, let's close out the show. I mean, we woke up today thinking the big news was going to be the PCE number that rolled out, and it seems like nobody's talking about it. Yeah. Was there anything in there that would be cause for concern regarding the Fed, especially since they're meeting in, 4 weeks from now?
Yeah, I mean, there's clearly not going to cut rates, I think, 4 years from now, 4 weeks from now, based on that number. So I think that's off the table. And
I don't think it's in the market that they are.
No, I don't think they are either. So I think the market is much more sanguine about this issue. So yeah, like I think it'll be
It's basically like I've been saying, Todd, we're going through this period of transition. There's some good, there's some bad, but I think the general movement of the train is forward and a little up and to the right. And so with that, you got to avoid the potholes. You got to avoid, and remember last week I said it's rain, like the weather, rainy, slippery, a little snowy, icy. So you don't drive, and you don't drive 90 miles an hour. But if you do, you're still moving in the right direction. Maybe you're going 60. I think we'll be fine.
Okay. I like that. Yeah, I like that a lot. All right, guys, we're going to close out the show there. I know we talked a lot about the tariff ruling. We'll have continued breaking news on BTT, but I want to thank both of you for coming on today for Wayve Wire. This was fantastic. We will have another live episode next Friday at 12 noon Eastern, ladies and gentlemen. You will want to tune in. We will have a full week of trading, obviously, and more digestion with the Supreme Court ruling. So, gentlemen, thank you once again for joining me, and we'll definitely catch you next week. Coming up at 2 o'clock, everyone, we have Gina Martin Adams. She is the former chief market strategist at Bloomberg. She's now the chief market strategist at HB Wealth. She's joining me for a live conversation to further discuss what happened with the Supreme Court. It's coming up at 2 o'clock Eastern, live. You won't want to miss it. Until then, take care.
We're the economic modern family. Watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene. From the streets to the screens to your trading machine. Tap in, stay tuned. Feel the beat line, cause the market tells a story through the family line.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.